Hello and welcome to yet another edition of Let's Talk on DNTWOK. My name is Oluja Kemosaku and the program is Let's Talk. Yes, it's Let's Talk. And today we will be discussing the topic alternative investments, private equity, hedge funds, and commodities. That's our topic today. You remember I said we're doing some investment talks so that we can help one another, find alternative means of making money instead of living from paycheck to paycheck or just going one-way traffic. So today again, we have someone very special to the house, Mr. Gbolahan Bello. He is a chartered stockbroker. So he will be discussing this topic with us this day. But before we go into it, please remember to subscribe to our YouTube channel. Follow us on all of our social media platforms.
JK Royal Signatures, a blend of African fabric.
Thank you so much, sir, for coming on the show. It's indeed a privilege to have you here.
Oh, thank you very much for having me.
All right, sir. So now the topic is alternative investments. I know we're going to be talking about private equity, hedge funds, and commodities. But how would you explain alternative investments? When we talk about alternative, what would you say it should be or it is?
Okay. Thank you very much for having me on your program. It's really an interesting session to educate and talk to our listeners on the other side of the screen about investment generally. Investments have been known for ages to help individuals and institutions to grow their wealth over time. Relatively, most households and institutions are particularly been interested in traditional investment asset classes. When I say traditional, I mean the regular equities and bonds. That's the fixed income and the shares of quoted or listed companies, in the stock exchange, But when we now say alternative, okay, you should say, oh, what are the other asset classes that are different from the well-known, well-known traditional asset classes, So alternative investment will range from investment in instruments such as commodities, real estate, private equity investment, and most recently, cryptocurrency. So for commodities, it could be energy commodities, energy-related commodities. It could be agricultural produce, i.e. grains, and the likes. We also have metals, precious metals, gold, silver, there are also alternative investments. And also artworks, collectibles, have also proven to be very good alternative investment for would-be investors to consider in growing their wealth in the face of global inflationary pressures, there's need to find instruments that would pay off, that would net off inflationary pressures on our wealth. I think that's all I can say for now on alternative investment.
So what makes it different from the traditional investments that we've always known?
The traditional like I said earlier, if we look at the asset classes under traditional investment, you are looking at your regular stocks in your shares of companies, Facebook shares. We have banking shares in Nigeria or any other listed companies in a public market. You're looking at bonds, fixed income instruments. They pay you a fixed rate of return. And then if you have cash, too, there are also traditional investments. But for asset classes under alternative investment, you will look at the commodities, um, uh, real estate assets, artworks or collectibles, private equity, and then recently, like I said earlier, cryptocurrencies. Another area we would also consider the difference in traditional and alternative investments are the areas of liquidity. For your traditional asset class, it is easier for you to trade and convert to cash. The solvency capacity of that investment is easier. But for alternative investments, it might take a longer period, for you to convert to cash. You buy a real estate, a property, and then you need cash urgently. You may have to be patient. We also look at risk profile of the investment. For the traditional investment, generally the risk profile is often very low. They are not that risky because of the frameworks or regulation around it. But for alternative investment, they have a higher risk with the potential for higher returns. So the investment tenure or horizon for traditional asset classes are often between short term. Maybe you can consider an investment horizon of 2 to 5 years. But for alternative investment, you will need to have a longer term investment horizon. I
All
think
right. So
that's basically pretty much the difference.
okay.
Yeah.
So why do we have institutional investors allocate capital or alternative investment?
Institutional investors oftentimes would seek higher returns, on investments. So if you want enhanced returns on your investment, the capacity to take a higher risk is there for them because they would have investment managers, who will consider all of the factors, the macro factors, and will take better decision in deploying the investment. So the capacity to want to secure higher returns and lower or manage the risk is higher for institutional investors. So they are able to allocate a significant portion of their capital to alternative investments. Also, if we consider uh, income generation capacity, uh, alternative investments will definitely be able to give you higher returns than the traditional investments. So our institutional investors will be interested in putting their money there. I used to, over some years back, not a long time ago, I think when was COVID? I think it was 20,
Thank you.
was it 20? It's not a long time, 2019 was it 2019? Yeah, COVID. We had this gold refinery in Nigeria that was interested in selling gold. There was a bazaar for sales of gold at that time. We were just coming out of COVID, so and the price of gold then was just a little around maybe if you not a lot of money, but if you consider the returns on gold today, between that time, gold has given you over 200% returns in the last 5 years. You know, that's an example of an alternative investment, scope that, and that 200% has actually beaten inflation rates. So their target is to generate more income, generate enhanced returns, and accessing those markets is easier for institutional investors. So they will tend to deploy more resources into that area. Another area that I have not spoken about is the private equity space. There have recently been a phenomenal increase um, in fintech, some fintech startups, some and some other kind of startups, that are requiring capital investment. So over time, because those institutions, those startups are providing unique solutions, they require capital requirement, and then private equity into those startups is yielding significant returns because they serve as alternative investment as well. So that's basically some of the reasons why institutions allocate more capital to alternative investments.
All right. So you said the risk factor is quite minimal when it comes to.
Yes. Yeah.
Could you give us other risk that is associated with alternative investments?
Not all alternative investments have minimal risk. In fact, some are high. Most are highly risky. Because it's oftentimes some of the investment are beauty in the eyes of the beholder, and because you're going in there with less regulatory. Not until recently we've had a law in these climes where I am in that covers alternative investment. That was done some weeks back in Nigeria where I live. So the risks are significant. I would say the risks are more significant in alternative investment, but the tendency to generate higher returns are higher. So you have some risk around illiquidity risk, for example. If you buy gold, for example, and it is not an exchange traded gold, if it's a physical gold, the tendency for you to find a ready market, a ready organized market for gold is lower. And when I say on the organized market, that's if you are not trading it on an exchange or a proper firm. So the framework of illiquidity risk, tends to affect decisions around alternative investment. We also have, like I said, regulatory risk. Most clients do not have sufficient regulations to protect investors, for alternative investments. Like I did say earlier, our law in Nigeria, where I live, just came in a few weeks back. But before then, there wasn't much regulation around protection of investors in alternative investment. We also look at transparency, issues around transparency and complexity. You look at an instrument, an alternative asset class like cryptocurrency, the capacity for a regular investor to understand the intricacies behind such alternative investments and how it is traded is lower. So those are some of the risks that are associated with alternative investments.